Welcome everyone to Vested Interest. This is Shane back again for their Stock Pick of the Day video. It is October 2nd, the first Monday of a new month. We are going to take a look at Pool Corp. We are in the fourth quarter of the year, final quarter of the year, quickly wrapping up 2023. Hopefully it has been a great year for you. I know the market has been pretty bad the last couple of weeks, a lot of red. So we're going to keep looking for value in the market. We're going to cover one today that we have not covered before, Pool Corp. Let's jump right in. This is out of the consumer discretionary sector. Pool Corp is the world's leading wholesale distributor of swimming pool equipment, parts and supplies, and related outdoor living products. So just as the name kind of indicates, they are anything to do with pools, anything around pools, pool equipment, the pools themselves, the supplies to maintain the pools, backyard barbecues, that sort of thing that you might install around a pool. That is what this company covers. And if you own a pool, you are probably buying, whether you realize it or not, buying materials and equipment, heaters, cleaners, the cleaning solutions and stuff that you put in the pool, supplies, everything else along with it, filters, you name it, everything that you buy around pools, the toys even that you buy for your kids, this company kind of has a lock on those particular items and the pool industry itself. The company operates over 420 locations worldwide with more than 6,000 employees through three primary distribution networks: SCP Distributors LLC, Superior Pool Products LLC, and Horizon Distributors Inc. Our sales centers each operate with full profit and loss responsibility, giving our organization an entrepreneurial spirit. With sales centers located across North America, USA, Canada, and Mexico, Europe, France, UK, Spain, Portugal, Italy, Belgium, Germany, and Croatia, and Australia, we distribute a broad range of products to roughly 125,000 customers around the world, serving four principal markets: remodelers and builders installing new swimming pools and refurbishing existing pools, independent specialty retail stores selling outdoor living products to consumers, service companies performing pool and hot tub maintenance and repair, contractors serving in the irrigation and landscape maintenance markets. You can read the rest of this, getting a little long-winded there, but if you want to know more about this company, check them out, www.poolcorp.com. That is www.poolcorp.com. That is their homepage where I pulled this information from, and anything around pools. And the big thing that I like to point out is they are a worldwide company, or they have a footprint around the world. They might not be a worldwide company in every country, but they definitely don't just have a footprint here in the United States. So that's important. And the reason we are taking a look at them, down 1.99% today, and just one of the many companies that was down today, we are talking about Pool Corporation, ticker POOL, closed out the day at $349 even. 52-week range as low as $278.10, as high as $423.97, and I would like this one right around 300 or below, so I'm looking for more of a pullback here on this one. Average volume 389,000. Today was 316,000. Pretty much a sell-off. Not quite a sell-off from start to finish. A little bit of volatility, but overall definitely on the downward slope. Market cap of $13.629 billion, a beta of 0.98, so they are just a little less volatile than the overall market. Price to earnings ratio, $22.41. Here again, I'd like this to pull back more, so this would come down into maybe the 18 range, again around $300 or lower. Very high EPS on this one's. Earning per share is $15.57 per share. Next earnings date is October 18th through October 23rd, sometime in that range there. If you're interested, go ahead and check that out. For dividend, $4.40 paid out in the year. They are a quarterly payer. We will see that here in a little bit. And I went back all the way to 2013, so they have been paying for about a decade now. Dividend yield 1.28, so this is a little lower than I typically look for, but again, if it continued to pull back, you could get this at a higher yield. Ex-dividend date was August 9th. We just passed that, and it looks like they paid out August 24th. So if you were to buy them now, you would be in line for the next dividend payout. And a one-year target estimate, at least according to Yahoo Finance, $381.90. I am not affiliated with Yahoo Finance, just one of the sources I like to go to for information. Now, I like to get into statistics. We're going to look at dividend yield theory, see if this one is potentially undervalued. To do that, we go down to the 5-year dividend yield average, 0.90. We look at its current 1.28, same number here, right? It says forward annual dividend here. It's the current number. And since it is higher, this speaks to some potential undervaluation on this one. Very low payout ratio, 27.06%. So a lot of room to increase this dividend over time, even though it is a low payer. And again, if you were to wait on this one and see if they pull back closer to this 278 low, or even set a new 52-week low. General Mills, for example, just set a new 52-week low. So it does happen, folks. Then you would obviously get a higher dividend yield. Now, want to look into the financials on this one. If you're interested, a lot of good information here. A balance sheet, income statement, what's the revenue look like, what's their debt ratios look like, assets over liabilities, all that information in here is very good information to look at. We're going to look at free cash flow. We want growing free cash flow over time because we want growing dividends over time. So 2019, 265 million here, 2020, 375 million, 2021, 275 million. So it looks like a bit of a drop from 2020 to 2021, but then right back up into 2022, 441 million, and it looks like to date 778 million. And not only is their free cash flow growing from 2019 to date, they are also consistently buying back their own shares. So very nice overall. The numbers on this one look very good, except for the valuation where it currently sits. PE is a little elevated. Like I said, I'd like this 18 or lower for this type of company. Now we're going to look at stockanalysis.com. I always recommend more than one source. This is just another one that I like. So you pick out any 2 or 3 or 4 sources that you like. Just make sure you are looking at more than one so you can make sure the information you are getting is accurate. Sometimes these companies take a while to update. As you can see here, this has been updated July 21st, but has not been updated since. So this is information maybe a few months old, and that's why you want to look at more than one source so you can make sure the information you're getting is updated and accurate. Now, according to the 11 stock analysts, they had to take a look at this back in July. They had a low estimate of $315, which would be a 9.74% decrease from where it currently sits. They have an average estimate of $378.82. That would be a 8.54% increase from where it currently sits. And if it happened to hit their high estimate of $445, that would be a 27.51% increase. All the while, you could collect that 1+% dividend yield. Now, I like to get into statistics on this one and look at return on equity, return on invested capital. I like 10% or better on both of these. Return on equity smashes that, 46.4%. Return on invested capital, same thing, more than double, 22.40. Even the return on assets, 16.1% if you use that one. This one is not one that I pay as much attention to, but it is there for just a bonus. Now, the only thing I didn't like is they did not have an EPS growth forecasted estimate at stockanalysis.com. Or a revenue growth estimate, but you can look at other sources for that information and see what they think. Now let's take a look at the dividends. Again, very low payout ratio. This is saying 29%. I think it said 27% on Yahoo Finance, so we'll just call it 28% and split right down the middle. And very high dividend growth on this one, 16.67%. So even though it is a low payout right now, it is growing like a weed, right? And payout is March, May, August, and November timeframe. So that would be where the payout sits. And again, I went back to 2013, but we're just going to go back to 2020 here. It was 58 cents August 12th, 2020. Jumped it up to 80 cents in May 2021. Jumped it up again in May 2022 to $1, and just jumped it up May 2023 to $1.10. So they are definitely increasing that dividend at a pretty fast clip on this one with a very, very low payout ratio. So this one looks very attractive other than the current price per share. I would like that to pull back a little bit. This is the vested interest stock screener. This is how I set up the videos. It is also how I look at the companies that I'm interested in buying to see if they meet the certain criteria. If I am interested and they meet 5 of 8 or for financial 6 of 9 of this criteria, then I do more of a deep dive. I look at the financials of the company, look at more of the forecast, do a discounted cash flow analysis on it, and see what value I put on the company. Now, we'll run through this real quick. Understand the business. That's why we start the video where we started, looking at their homepage. Growing free cash flow. We looked at that, and it is growing over time. Growing dividend it does have a growing dividend right now. Dividend payout ratio of 75% or less, definitely under 75% at 28%. Check valuation based on dividend yield theory. Dividend yield theory says this one is currently undervalued, even though I would like more of a pullback on this one. Buy below current cost basis or within 15% of 52-week low. It is not within 15% of its 52-week low. So that's why I say I would like more of a pullback on here, because that's really where I want companies either within 15% of their 52-week low or setting a new all-time 52-week low or right up against it is where I'd like to pick them up. return on invested capital, return on equity, 10% or plus or greater than the industry average. This definitely beats both of those. Earnings per share growth, we saw that this didn't have a forecast on that one, so you'd have to look at other sources for that. Now, for financial companies, I throw in price to book. On this one, it would definitely be over one. One or lower is good for financial companies. This one, you'd have to compare it to other companies in the same industry, which is hard because there are not a lot of them. That's why I say this particular company, Pool Corp, kind of has the market cornered. It is not a monopoly. There are a couple of the other smaller ones, but they do buy out their competition over time. So that's why I said this one has a bit of a moat on it, right? So this one definitely meets 5 of the 8 right now. So if you were interested, do more of a deep dive, get into the financials of this one, do your own discount analysis, discounted cash flow analysis, or figure out a way to value this company, see what you're willing to pay for it. For me, I'd like it back around 300 or under. Personally, that's where I'm at with this one. But I do like the company. I like the metrics. Looks very attractive. Well, that is it for this one. Trying to find value in this crazy market. A lot of red in the market right now. A lot of companies are presenting value right now. Let me know what you're buying down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we may be looking at, that we want to buy or that we are buying, or ones that we're avoiding altogether. Drop a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Pool Corp you'd like me to cover in the Stock Pick of the Day series, again, drop it down in the comment section and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. And this is actually a sunrise from this morning that my wife sent me. Right now I'm off to work before the sun rises, but this was a pretty nice one, so I thought I'd share it with you. You see the ducks or geese maybe that were swimming by this morning. It's a very nice picture. I thought I'd throw it up there. Well, that's it for this one. Appreciate you stopping by. Tune in to the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount of comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.